Hello, and welcome to another update video about Fetch AI. Yeah, on the Fetch chart, we have seen this ongoing sideways price action over the last couple of days. We talked about that potential in the last few days, and I already showed you that we might be dealing with a fourth wave in a triangle pattern. We can talk about that in a little bit more detail in this video. So it means we might see here one more low before we start to go up a little bit at least. Idea is still, and we can take a look at the daily chart here, or the 2-day chart, doesn't matter, that we have still a chance, there's still a chance to see one more high in this bull market in wave 5. I have plenty of charts where I'm still watching for another high, like Casper, Injective, Render, Fetch, but most of them have done what they need to do. I mean, no, most of them have already seen the major part of the rally. I think that's sort of how I should say it. I mean, you know, from even here from the, I don't know, January 23 lows, the price to the top has gone up like 2,500%, right? So it's not going to do that again, right? So it might do another, I don't know, 3, 4, 5x maybe. It certainly has disappointed a little bit because, and this third wave just didn't go as high as I wanted it, because we know that, like, let's say statistically, and we've seen that example on the ADA chart today again, a third wave normally reaches the 1.38 extension. If it doesn't, then we have a reason to worry. I'm still watching the white count primarily, which allows for one more high, but it basically is the bullish, let's say the bullish thesis is based on a third wave that's too shallow and let's say not strong enough, okay? And that's not great. And that means, okay, we have to just be a bit more on the side of caution. It's definitely reduced the let's say the quality of the chart. The fourth wave could be unfolding right now, and we have a support region between $1.08 and 52 cents. And here we can be watching for a reversal. I don't expect a substantial reversal yet, but a bit of a corrective rally is due, I think. And then we could see a fifth wave from there at some point from this support region. We have Fibonacci support at $1.08, 75 cents and 52 cents. How high it will eventually go depends a little bit on how deep the wave 4 goes. But if we take a look at the Fib extensions that we have on the chart, 485 and 870 are still possible upside targets that I'm watching for. This is the bigger picture. Going to the 4-hour time frame, we can see that from this, what was it, the March top? Yeah, from the March top, we've seen quite a substantial decline towards the support region. The Fibonacci support levels are being respected. The price is dancing on that upper Fib level here, the 38.2 retracement. That's normally a very common target for a fourth wave, but there's currently no buy reaction, so I don't assume the low is in. What I could imagine possibly a B wave rally first, so that we are working on a larger ABC structure here. So A wave, B wave, C wave. I wouldn't, let's say, expect high precision here in this wave count when we talk about a corrective structure like that, because it doesn't give me a very, very clear picture. What I could imagine is happening is that, for example, we bottomed in wave A of 4 here on the 17th, 18th of June. We're now forming a flat structure in an A, B, C structure, but then this B wave to the downside, which consists of an ABC structure itself, might need one more low. What I'm looking for here is this sideways triangle. It looks like a fourth wave, which, yeah, as I said, could be a triangle. So triangles are ABCDE patterns, A wave, B wave, C wave, D wave, and we might just need a little bit more upside before we break down. So I'm clearly here still I'm watching for one more low in the short term. But with every analysis, you get an invalidation point, right? So the invalidation point will be this swing high. That is based on the microstructure within the triangle, which I'm not showing, but it would be the A wave high of the triangle, and that's at $1.29. So any break above 129 would give us a good indication that the C wave rally within possibly a larger B wave, or at least a corrective rally, is unfolding. Yeah? But until it happens, I'm watching for one more low here at least. Okay, that would be in wave 5 of C of B. But bear in mind, I'm not confident in the microstructure, but looking at the patterns here, it looks like a triangle that might need one more low, because triangles are not the last wave of any move. It's the second to last, so there should be one more to come. Not much more clarity here at the moment, unfortunately, but this is all clearly corrective price action. Support levels are clear. upside trigger point as well. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.